What's up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. And today I have a very special guest with me, Anthony Vince. He's a partner and global head of trading at GSR, which is one of the first and largest funds in the crypto space. Anthony, man, how are you doing today?
Yeah, I'm good. Thanks. Yeah, pleased to be here.
Thanks, man. So listen, you've been trading for 23 years, institutional level across the board, maybe even longer if I'm quoting it wrong. Why'd you go into crypto? Why'd you go into crypto?
Yeah, good question. I've got a passion for trading, and I think, like anybody who do this job for that long, you've got to have a passion for it. I started in derivatives trading and spent a decade doing that. And at the time, there was a lot of edge in that kind of trading. There's a lot of product development, really interesting, a lot of money to be made. And like anything like that product life cycle, it got more and more competitive, tougher and tougher to make money. And then I made a fortuitous switch into high frequency trading. And at the time, no one knew what HFT was. Like, you couldn't buy a book on it. You couldn't do a course on it. No one understood it. It was just like, and at the time, you could make money rampantly in that market. And there was a lot of, really interesting things to be doing. And like anything, again, it got super competitive, super developed. You could buy books on it. You could do courses on it. And it was all pretty well understood, and everyone was trading for very fine edges. And then along came crypto, and again, it was like, what's crypto? People were kind of laughing at it, thinking this isn't really serious. And when you look at it, well, when I looked at it, I thought, wow, there's lots of edge here. We can apply what we knew and loved from sort of HFT and derivatives trading into this landscape. And, before the competition catch up, hopefully we're ahead.
That makes perfect sense. So to that end, what makes a good crypto trader? What do you guys look for when you're hiring? Where do you find that edge?
Yeah, I think I would say that we can identify these guys pretty quickly, not only from their resume, but also, from where they've worked and maybe what exposure they've had and whether they understand the secret sauce behind the place that they were working. It's not always the big, very successful places you would think, because often they're so well developed that they don't actually, people are compartmentalized and don't exactly understand the secret sauce behind it. So we can identify them, I think, pretty quickly, and we've had a good hit rate there. In terms of some of the attributes, I think, that are common amongst the best traders, like they're highly disciplined, they're got a very good attention to detail. Trading rewards are kind of obsessive behavior in a way. You just need to be quite obsessive about it. And there's drawbacks to that. And so you have to kind of manage stress management and just trying to balance your kind of life a little bit. But it does reward that kind of behavior. And it kind of rewards like a rules-based mentality. The closer you start thinking like a computer does, the better you will be at big scale trading, where you're having to make decisions all the time. So whether you're programming an algo, or whether you're just repeatedly, quoting vol in the markets, and that following good rules and understanding your edge in the market and honing that thing, the more you do that, the better you will be. And I think to be a successful trader, you need to have been in the markets for quite a long time. Like, you could call a successful trader someone who's just been there for, a week. They may just buy an NFT that just explodes in value. It doesn't make you a good trader. It might be lucky. So that's one thing. And then people that focus on the process and not the outcome, they're just focused on doing the right thing all the time. It's just like how an athlete trains. An athlete trains to focus on the process, not just this outcome, because then you become more robust and it's more repeatable, right? Like, you can just keep on repeating the same thing. And I think in particular at GSR, I pay attention to not hiring too many people from exactly the same place, and I think people fall, they make a mistake here. Like, they would just hire 20, 30 people from exactly the same place. And what tends to happen there is this crowd mentality, or they get faced with a problem and they all have exactly the same solution to that problem. And then they can't find their way out of this problem. So if you limit the DNA, or the sort of, the amount of people from one venue from one place to sort of 3 or 4 people, you find some really interesting solutions to problems that you get faced with trading.
Makes perfect sense. I love the point about muscle memory, right? If you repeat it enough times like an athlete, then it just becomes natural and you can do it. And I think that focusing on the process and not the results is another huge point that people generally miss. The success of your trade is not determined by whether you made or lost money. It's really whether you followed your plan and if you had a good plan in the first place, right?
Yeah, and I think it helps you deal with the emotions. You know, like everyone knows to be a good trader, try and take the emotions out of it. And if you do that, then, and if your emotion is linked to the outcome, then you get emotional. You're like, oh, it's a bad outcome, I'm going to be sad. Whereas if you focus on your process and own this process, as long as you're pleased with the process, the outcome's bad, you go, yeah, but okay, well, I did what has been tried and tested and always tends to work. So I don't feel so bad about it.
Right. Do it 1,000 times and then judge yourself, not one.
Yeah.
So listen, obviously now there's a ton of money in this market, right? Crypto is not as much a small nascent industry where you probably have that edge that you were talking about before just by being there early. So I think a lot of people would be interested to hear how big money moves in this market. You guys are whales by any account, I'm sure. So how do you actually trade at that scale when you're not just a retail guy placing bids and asks and, trading your book?
Yeah, I mean, I suppose, we do a hell of a lot of trading activity. You know, I would say like we're integrated to 60 exchanges. I think we trade like 13 times a second. So every time you blink, we've done 13 trades. We've got like, we handle something like 90 million orders per day, depending on the volatility of the market. And we're trading, I think today we've already traded $3.5 billion. So it's a bit like trying to hit bullseyes on a dartboard all day long, so we pay attention to, we pay a lot of attention to robustness and our tech risk. That's one of the things that are really important for us. So it's very propeatable, it's very robust, it's very calm. We understand our edge and our pricing and all that, and we just make that sort of machine. We prototype that machine, make sure it works, and then we scale it up. And we seek to automate as much as we possibly can, so that we can get that scale out and have sort of relatively few people managing it. In terms of how crypto really works, like I suppose. For players like us, we've got a dedicated sales team that are talking, always talking to the ecosystem, always talking to new projects. We understand what's sort of coming before it's even hit the order books, in the sense that what new projects are out there, when are they listing? We've got good information, and that helps us sort of work closely with the projects and get good outcomes for them. And just being like knowing the key players in the market, I think that's really helpful.
I'm curious as to where you think the market is headed right now, where we are in the cycle, if it is a cycle, just your general opinion on the market.
I mean, I'm bullish. I think it is up and to the right. That's been my belief for most of this year. I think whenever we see like the market shank down and like it's all these sort of weak hands getting liquidated, and I think like Gensler says something, or we've got the Evergrande news, but it shakes it off and it's bounced back again. Bitcoin in particular doesn't seem to be able to get through 50K, but like when it does, then I'm kind of thinking 75K is a nice round number, is somewhere to work towards. But I'm not bullish just because of just sort of like a random bet. It's more that the information we see from the institutional side, we're seeing people preparing to come into crypto. We see that kind of wall of money and interest, and the people are preparing to get into this market. So that you can't see that in the price action or the order books at the moment. So I think that that makes me bullish.
You talked about 75,000. I'm assuming you mean that's sort of a more immediate goal. Do you think that it's hyperbolic to talk about hundreds of thousands or $1 million Bitcoin? I mean, Fidelity said $1 billion of Bitcoin, the most ludicrous thing I've probably ever seen. I love it. Of course, it's hilarious. But I mean, how high do you think this thing can really go?
For a guy who operates in milliseconds and seconds, it's like super difficult. It's like it's not impossible. Why not? It's not impossible. I think there's a lot of liquidity in BTC, and I don't think the whales can push it around quite as much as they used to be able to. So it can't do 10x, 20x, and things like that, where you can see that on the altcoins. But I guess BTC is kind of a bit of a bellwether, and it's what everyone. It kind of represents crypto in a way. Everyone thinks about crypto, they just go, oh, BTC, and then they look at the price. So Yeah, why not? You know, I could see 100,000 and it will get there. I just don't quite know when. But that's the trick with trading, right? It's like, it's not only the sort of the price point, it's actually the timing that's quite kind of relevant.
Such a good point, especially felt by anyone who's ever traded with leverage and was right about the direction, but stopped out right
Yeah.
before it went there. Right? It's that's the most common part of trading. People think your average person thinks it's a binary decision, up, down, right, wrong, profit, but there's so much more that goes into it because you have to time it right and play it right.
I think that's the interesting thing as well. Like, I think in crypto, people run too tight to stops. You know, like you see this all the time where, like for us, like one lesson that I learned and we learned was that if you have this kind of a really low risk tolerance view of crypto and you try and trade very precisely and accurately and set your stops like, you know, relatively tight, you don't factor in the fact that really unpredictable things can happen in crypto. Like it's mind blowing, some of the things that happen. And if you give yourself a lot more risk, particularly guys are trading perps and they just have these liquidation events way too close, it just repeats itself all the time. And the wealth just goes from the weak hands to the stronger hands every time, you know, and maybe people, you know, maybe these guys should just trade a little bit smaller, but with, you know, a bit more margin and wider stops, and they'll survive some of these, you know, this volatility better.
I think most retail traders, unfortunately, start at the amount of leverage and position size and go backwards, as opposed to figuring out, you know, where their stop loss is going to be and how much they're going to lose based on by sizing correctly. But so it sounds like, I mean, we know that's what happened from 65 to 50, right? $10 billion liquidated. That was leverage, 100%. We saw 40 to 28 was another few $1 billion in liquidations. Is that, how do you get past that? Do those weak hands eventually just have to be completely flushed and disinterested for price to eventually rise? Or do they just open interest keeps rising, they keep longing it every single dip, and eventually somebody takes advantage of that and crashes it?
We track the OI in the markets, you know, and we kind of know, we've got a good idea of where the price formation process is in the market, where it sort of starts from, and, you know, where this leverage kind of, you know, starts to build up. But you see similar patterns all the time where OI just builds up, too much leverage, people getting overexcited. There's just kind of this FOMO stage where everyone's like, oh yeah, this time it's going to do it. And they pay, you know, 49,500 for BTC, and then boom, some guy comes in and finds a vulnerable point in the volume curve, or during the day they find vulnerable points, and then they maybe push it, and the kind of cycle repeats itself.
What would you say to people who are new to trading this market? Obviously, your advice right there about widening your stops and reducing your position size is probably a gem for most people. Is there anything else you would say to people who are relatively new traders, or aren't necessarily new traders but are new to the crypto market coming from elsewhere?
I think if you're going to be serious about trading, you need to understand what your edge is, you know, like if you don't have an edge, then that's your first problem. So you need to really think, well, what is it that I know about the market that others don't? If you want to participate, then that's great. Just hodl, buy it, you know, have a diversified set of investments in crypto and just hold it. And but if you think you're going to get into arbitrage trading or something like that, then you've really got to, you know, simulate your strategy. You got to prove that it actually works out of sample, and you've really got to like focus in on that whole thing. But I think the other thing as well is trading is to maximize your survival rate. You know, make sure that you can actually, like, part of trading is to be able to come in the next day and not be completely wiped out. So make sure that you protect your portfolio, you know, and put a percentage of it in that trade, you know, and build from there. The point is to continue and to build upon this whole thing all the time.
That's the hardest part though, right? You have a plan, and then when your stop's about to hit, all of a sudden you start to question your plan and move your stop, and you give up 10 days worth of gains in one massive loss that should have been 1% of your portfolio and ends up being 10, right?
I think that's where the discipline comes in as well. Like if you know, like you see how a lot of quant traders work, you know, like you design an algo to capture on some particular pattern in the market, and you, like, you know, you code it, you check it, you add a sample, it kind of works, and then you just stick to the rules, like discipline. Just like, I'm going to put it in no matter what. I'm not going to change it. It's going to put it in. If it works, great, I'm going to continue. If it doesn't, okay, I'll reassess, redo my research, and have a reason to re-enter the market. If you start to gamble and just get emotional and start to like hope, you'll eventually get found out. because there's just too many smart people in crypto in particular. There's lots of very, very smart players in this market.
Any final thoughts before we get done? Anything you want to share about GSR that you guys have going on, or any predictions for the future?
Yeah, I mean, I think like, things are going very well at GSR. I think we've built a fantastic sort of client franchise. You know, we're almost at a point now where we're willing to quote on anything in crypto to clients, you know, so whatever it is, though, we believe there's a price for almost everything. So that's kind of one of the targets we've got. We've set up our team to be a bit like a special forces unit. You know, we're just kind of like, okay, we've got good quants, good coders, good traders, good salespeople, and we don't, because crypto pivots so quickly, and you just don't know what's going to happen like the next day. You need to have these skill sets to solve the problem, and so GSR is an exciting place to work from that perspective at the moment, and I'd encourage people to apply. We're definitely hiring at the moment and growing. So yeah,
I'd imagine always growing. Where can people follow you after this?
Good question.
You on Twitter?
I'm on. I will set up it. I am on Twitter. Yeah, and I'm on LinkedIn. People can hit me up on LinkedIn. Actually,
I'll have them fax you. Thank you so much. It's really great insight. I think that there's so much confusion as to how it actually works on the back end, right? The mechanics of this trading. I think you clarified a lot of it. And I know that a lot of people who will be watching this are amateur traders or certainly new to the crypto space. And I think you offered a lot of insight as to how not to get completely and utterly wrecked, which is the thing that we're all trying to do. So thank you so much for taking the time. I really appreciate it.
Thanks, Scott. Thanks very much.